Welcome back. There's a look at West Fraser Timber. It is up. It's been an up and down ride, but it is up 14% compared to a year ago. West Fraser has reported fourth quarter earnings after the close yesterday. They essentially matched analyst estimates, but as we see, the stock is trading down slightly. Let's speak with Ketan Mamtora, a building products analyst at BMO Capital Markets, to break down the numbers. Ketan, thanks a lot for joining us. The company reported sales of $1.4 billion, adjusted EBITDA of $140 billion. What do you see in these numbers?
Good morning, and thanks for having me. Look, they were mostly in line with what I was expecting in terms of my numbers. It's been a challenging year in lumber, not just for West Fraser, but for all the companies in the industry. And frankly, the big issues have been that demand in 2024 fell short of what people were expecting in terms of housing demand, right? At the start of the year, expectations were that interest rate cuts will help improve demand. We did not get a rate cut until much later in the year, well past the busy spring and summer construction season. That led to some supply cuts later in the year. But we've seen modest improvement in prices, but lumber still is kind of well below what I would call normalized levels. In contrast, the OSB business, which is also where West Fraser is the largest, has done quite well this year. And that's because the new residential construction market has actually held up okay, better than at least what the R&R market has done, the repair and remodeling market, for most of 2024. For lumber, repair and remodeling is the largest end market. For oriented strand board, new residential construction is the largest end market.
Is it fair to say the U.S. is this company's biggest market?
Absolutely, yes. The vast majority of what they produce, and they've got capacity both in the U.S. and in Canada. In lumber, they are split sort of 50-50 between the U.S. and Canada. And in the case of OSB, they've got about 3/4 or a little more in the U.S. And in terms of just the sales, the biggest end market is far and away the U.S.
The company is pretty candid about being worried about tariffs from the United States. It says in its earnings release the potential for the U.S. administration to impose broad-based tariffs on Canadian exports as another element of demand uncertainty for the products we ship to the U.S. How concerned are you about tariffs and Canadian lumber? And as we know, this has been a point of contention between the two countries for a long time.
It is. And frankly, there is the ongoing lumber dispute that's going on between the U.S. Canada. It's going on today. It's been going on for the last 6 years. So every stick of lumber that comes from Canada to the U.S. today and for these past years, there is a duty in place which the producers have to pay. And if there is tariffs, that would be on top of it. So it is. It will something that will have an impact if it were to go through. But as you know, that situation is quite fluid and dynamic. So we are watching it closely. The duties already are having an impact on production in Canada. We've seen, just because of the bug infestation over the past couple of days, steadily, production in the BC region has come down. This is also raising the cost curve with duties. And if, frankly, demand does not improve, we could see more capacity curtailments in the British Columbia region.
What do you make of the Los Angeles story? It's becoming common now for people to assume that the rebuilding of the fire-hit area of Los Angeles is so great that this will be material to lumber producers. Do you agree with that?
Look, it was a very unfortunate event, but I think it will have an impact. But it will be, spread out. It's hard to imagine that all the rebuilding happens in 6 months, 9 months. So I think this will be stretched out, maybe a couple of years. In my view, based on what we know today, I think the impact will be relatively modest. But between the LA fires and the hurricanes that we saw in the fall of last year together, if you put put together, then I think there is some impact in terms of help to sort of rebuilding and incremental demand. But in itself alone, this is not a huge needle mover.
Okay, you have a buy rating on the stock. Why so, and what is your target price?
Yeah, so my target price on a US dollar basis is 115. West Fraser is the largest lumber producer, largest OSB producer in North America. They've got low-cost assets, long track record of best-in-class margins. Look, from a cyclical standpoint, lumber is challenged, but it's not going to stay here for an extended period of time. Valuation is very attractive at current levels. On our estimates, it's trading below 5 times our estimate of mid-cycle EBITDA. This is near trough level multiples. They've got a pristine balance sheet. They've got over $5 of net cash. So I do think that while there is some near-term uncertainty, this is kind of a very attractive entry point in one of the largest building materials, commodity-based producers in North America.
Ketan, thank you very much. That's Ketan Mamtora, a building products analyst at BMO Capital Markets with a